Just to kind of introduce the day to everyone, first of all, I'd also like to just extend a welcome to everyone. Thank you guys so much for joining us today. I'm looking forward to our discussion. It's this topic, obviously, as you all know by this point, is very near and dear to my heart. It's exactly what brought me to this space in the first place. So we'll be talking about trading. And the idea behind today's topic is we're going to be kind of swapping stories. Swapping our trading stories, because I know for firsthand that it's something that most of us have delved into. And I mean, the temptation is just always there in terms of trading NFTs, trading crypto assets, trading stocks, options, all these different things. And we're just going to have a powwow, and we're going to talk about it, and we're going to tease out all of the important lessons from the good trades, but even more importantly, the bad trades. So if you guys want to just kind of get that going in your mind, I've certainly got tons that I want to share with you guys, and definitely am looking forward to diving into that. So without further ado, shall we jump into this TA session here?
Let's go. So excited.
Perfect. All right. So, oh my goodness. Sorry, guys. My phone is just causing me problems this morning. So either way, I'm just about to post up my charts to the top of this here. I've just posted them onto my timeline. So here we go. Perfect. So they're pinned up there. So I'll give you guys a second to log into that. Also, Quantic, I'm also just gonna bring up our new Twitter landing page for Web3 Matters. If you guys don't know, we've kind of been making some moves in regards to expanding our reach when it comes to this, when it comes to our spaces here. We officially have a Twitter landing page, and we're going to be recording our spaces and plopping them onto YouTube and as well Spotify. And there's a couple of reasons behind this, and I'd love to just take a second and share this with you guys. But the one main reason is Quantic and I going into this from day one. Our goal has been to kind of just tap into the amazing knowledge and experiences that exist in this space and share that with the world to help lift all of us up together so that we all can actually make it in this space and take the most from it. So by moving recordings of the show to Spotify, to YouTube, we're kind of immortalizing a lot of the stuff that we do talk about. And there is just a tremendous amount of value that comes up. And that's not a shill on myself. That's a shill on all of you guys who show up every day and join us up here and talk about your experiences and your knowledge. And you take time out of your lives for free, just tell us exactly things that have worked for you, things that have not. And we don't want to take that for granted. It's extremely valuable. And it's an absolute honor to be able to come here every week and discuss these things with you. Also, just as a form of legitimacy, though, is a reason why we're doing this. We take this very seriously, and we want to honor all of the information that is provided to us. Quantic, did you... Yeah, I just want to, before I jump into the TA here, I just want to kind of send the mic over to you to see if there's anything else you wanted to kind of add on that note.
Yeah, no, just to highlight what you said, like we realized when we started doing these spaces with Trap that we were onto something, because most of the spaces were just like, dedicated to speak, not something in relation to like education or something that can help you grow, but rather to entertain. Of course, when we do this, we try to do it as entertainment as possible. But we wanted to do something that, after you leave this space, you have new connections and you learn something. Those are our two main goals. And we have been doing this from day one, and it has been an amazing experience. It is working, and it will continue to grow and, work even better. So thank you very much for all of you to join, and we will keep pushing this. So I give you the mic, Trap. Let's get started with the TA.
Perfect. Excuse me. Let's get started. So we've had some moves in the market. I'm going to start off with the Bitcoin daily chart. You can check out the pinned tweets above for reference to exactly what I'm looking at here. But we have been losing some ground. We officially lost the weekly pivot. The monthly pivot we are still on top of, and I'm trying to just pull this up again because it's, again, technical difficulties. But Yeah. So from what I understand and from my interpretation, it seems like this move was catalyzed by kind of the overall market trending downwards. This week we had a couple of big releases, macroeconomic news being released, and it kind of dragged down the Bitcoin or the crypto market with it as well. So you can see that we have the last let's see here. This is about 4 days now of red. We've if you look on the daily chart, you see these like fluorescent green boxes just to the left of where price action is right now. Those are fair value gaps, and those will very likely be filled to the downside. And actually, if you look at the live chart right now, they're already about halfway, 2/3 down that box. So I can see price continuing all the way down. I've drawn 2 arrows on the chart. The first one is green. The second one is red. I believe the green one is already invalidated. I think that I'll have to double check on the live chart here in a little bit, but I believe price has already kind of broken the low that I sectioned off there. So in my opinion, it's going to continue to fill the fair value gap. We have a light blue box. If you follow the red arrow down to the first pivot point, that is an order block, a bullish order block. And it's also can be interpreted as a supply zone for anyone a demand zone for anyone who uses that terminology as well. Basically, it's a spot where I anticipate that the bulls will step back in and try and protect price from going any lower. That's also a very important point because we also have the monthly pivot at that section as well. So there's going to be a lot of eyes on that level. And let's see here. I believe that's the 21,050 level. Let's just double check. Yep, 21,500 level roughly is where that is. So that's going to kind of be the line in the sand that I'm looking at to the downside, where if we do break that, that will officially put in a lower low. And then I can see price continuing down further from there. So I'm going to definitely be keeping an eye. I also wouldn't be, the other scenario is that it does not make a lower low and it goes back up to test that $25,200 level, which has just been such a phenomenal level of resistance. You can see that price has just been knocking its head on that level so many times. It had that very slight breakout before it just crashed back down. So yeah, long story short, these are my thoughts. I can see us heading back down to the 21,500 level. I hope that it will hold because I love seeing Bitcoin in this beautiful uptrend. The one other thing to note, and this is the one additional piece of information that I wanted to bring to the space today, something new, is that we have a bit of a bearish divergence happening on the daily chart. And what I mean by that is if we look at price, it's putting in higher highs, but I put a indicator along the bottom, and that's called the RSI. And basically, there's a specific calculation involved here, and it just basically measures the strength going into the moves in the market. And if you're interested, I can share some resources with you about that. But it's making lower highs. So when that happens, that is definitely a bearish signal, and that's when you would anticipate a reversal in the market. So I also have some moving averages on there. We're still on top of that. So hopefully those will come in and act as some strong support as well. But that's pretty much it for Bitcoin for the time being. Was there anything else? Oh, yes. This is one other very, very interesting thing that I wanted to share with you guys. If you take a look at the hourly chart, this is like textbook bearish signal here. And I'm sure you can hear it in my voice, but I'm definitely geeking out about this because I love it when theory actually comes in and just works out so perfectly. Even though it is a bearish move, it's still just, I don't know, I'm geeking out, but I'll restrain myself. I'll restrain myself here. So you see price action making lower lows into a horizontal level of support. So this is basically, in a nutshell, what is happening here. If you look at it from the perspective of buyers versus sellers, I'm going to start by the top of that left-hand side of that diagonal downtrend line that I drew, the yellow one. So you can see here that sellers jumped in from the top and pushed it down once it hit that pivot, which is that horizontal support that I was talking about, bulls jumped back in and bought up the asset and pushed it up, and it banged its head on the trend line essentially, to where the bears jumped back in, brought it all the way back down to the pivot, and the bulls jumped in and they tried to get it back, but the high was lower. So basically what I'm trying to say is that you can see that the bulls are running out of steam the closer it gets to the point of that triangle. This is, of all the chart patterns, this is probably, in my opinion, one of the ones that plays out the most on Bitcoin, at least, is that when you see price either making lower highs into a horizontal support, or in the opposite direction, higher lows into a horizontal resistance, that's very, very clear that there's an imbalance in the buyers and sellers, and one of them is losing steam and the other one is about to take over. So pretty cool. Quantic, does that make sense? Did what I say, did that make sense? Can you just validate that for me? If I need to explain that in a different way, I'd be happy to.
So we are going to zero. Nah, I'm kidding. Actually, I wanted to know, like, what was your price prediction for last week for this one?
Last week, actually, I had the arrows up, and the bearish price, I believe, the uber bearish prediction that I had was down to about, it was that, if you look on the hourly chart, it was that green, the top green. Wow, what am I trying to say here? My brain is just, it's stopping here. That first green support underneath that box at about 22,750 was kind of my uber bearish prediction. And while price hasn't hit there yet, we were able to kind of hold that pivot throughout the week. I can see that as for sure being a spot where price is going to be visiting in the very near future here.
Yeah, I can see it as well. Okay, perfect. You're doing good.
Excellent, man. Excellent. All right, let's move on here. Let's chat about Ethereum. So let's see here. I'm going to pull up. Oh yeah, here we go. The daily chart first here. So similar. We can see how effective these pivots are as support and resistance, and how important of a level they are. So first things here. Actually, that is I think I posted the hour chart twice. No, I didn't. Here we go. I'm back to the day. Perfect. So here we have the monthly pivot. We are on top of the monthly pivot still. So that is strong. And the same thing with Bitcoin. We're on top of the monthly pivot. But if you look at the weekly pivot on the hourly chart, we have broken through that. And you can see how important of a support that was. So next thing I want to mention on the daily chart is that I have this writing that says FVG fill. And what that is that box marks a level in price action where price on its way up created a fair value gap. I won't get into exactly what that is now. That's going to take way too long. But long story short, those do typically get refilled. So same with Bitcoin. I can see price completely filling that entire zone. There is a smaller one lower as well, close to where that blue line is, and I believe price is actually in on the live chart has already hit that section as well. But we've also kind of given up that important trading range that you can see. Those two orange diagonal lines moving in an upward direction. We've officially broken out of that now. So that's a strong support that we no longer have with us. So what I'm looking for on the way down now are that daily 50 moving average, that yellow moving average that you can see where price is still on top. Also, we have that strong demand zone to kind of the bottom of the trading range, that green rectangle that I drew on the chart. And most importantly, we have that monthly pivot. If we want to continue to see price moving in an upwards direction, we need to hold that monthly pivot. So definitely mark that on your chart. Keep your eyes on that level, because if we break below that in a way that is confident, essentially, like we have a breakout and retest, and I can see price going all the way down to 1350, where the next major support's going to be. So looking at predictions, I'm just going to quickly pull up the hourly chart here. Let's see here. Hourly chart. Basically, on the hourly chart, it's the same thing. You can see that we broke through the weekly pivot. You can see that green rectangle that I drew as the next demand zone below. I can see us definitely getting to that demand zone and testing it out. If we hold that demand zone, I can see us heading back up to hopefully around the $1,550, $1,600 level by the end of next week. But if we break that, that's when I can see it going down to the, $1,350 level. So yeah, those are my predictions. Any other questions on that, Quantic? Anything that I can kind of explain more on the chart that I threw up there?
I think that this one is pretty clear.
You're right. It's pretty clear. It's basically the same story as Bitcoin, and you'll see in a sec when I talk about Sol. It's going to be also a very similar situation here. Basically, the same things happening in all three. They're just going to have slightly different targets for supply and demand, if you know what I mean. So yeah, awesome. Thank you for that feedback. So let's end off with Solana here. Same thing. Yep, we broke that important uptrend. We've also broken the weekly pivot that you can see on the hourly chart. Moving back to the daily chart, we still have the monthly pivot underneath us that has acted as a very strong support. It's a very, very important level. And I really am hoping that we can keep price above that. So in regards to targets, we can see again how incredibly strong. So the line in the sand here for Solana is definitely that $27 level. Price has not even been able to do a fake out move above that level. It's been so incredibly strong. So I don't see us within the next week breaking through that. It just we've had some really good attempts and we haven't been able to make any headway. And now the bears are stepping in with some pretty decent volume. So I can see us heading back towards that $20 level within even the next 24 hours. If we hold that, then I can see us continuing in that range for a little while between the $20 and $25 level, maybe even the $23 level. But if we break that to the downside, I can see us heading down to the about $16 range. You can see on the right-hand side on the volume indicator there on the right, that's blue and yellow. That's the volume profile, volume by price, as they say. There's a nice big ledge between the $15 and $17.50 level that will act as support, and that shows that there's orders that have been placed there in the past. So there are going to be eyes on that level ready to engage with price once it hits that level again. And I think that's pretty much it. Quantic, I will throw it your way. Also, Bruce, you're up here with us. If you guys have any questions, happy to jump in there. Otherwise, I'm ready to get into it.
Yeah, I just wanted to ask actually, Bruce, if you have like any sort of trading experience. Have you been testing strategies or something?
I wouldn't say I have as much trading experience as Trav, but I have made a couple of connections with some guys who, like, since 2018, I made a couple of connections with one guy named Shades, and I don't even think he's on Twitter, but we're in a Discord together, and we talk all the time about where Bitcoin's going to be moving, and he mostly focuses on Bitcoin. And like Trav just pointed out, most of the Ethereum and Solana movement, especially Ethereum though, since they're pretty closely paired, the movement mimics each other's price action a lot. So and honestly, I've been talking to this guy Shades for literally like almost 4 years, and he's been wrong one time, and he's basically saying that he's waiting for things to shake out at the current level, and if things don't go below, let me pull it up here. I can tell you exactly what he said. There we go. Okay. All right, I'm in now. Okay, so here we go. All right, here we go. Nothing significant has changed since last Friday. His main expectation is to still hit. This is from actually, let's see. This is from the 20th, so February 20th. So this is 4 days old. So he's expecting, nothing. nothing has changed since last Friday, and his main expectation is still to hit 26.2 to 26.8 at a minimum, possibly higher, and it could get up to 28,000 as an extension. But his main expectation is for Bitcoin to stay above 23.3, but obviously there's no guarantees in this space. So if we do get to 26K, he's going to expect a strong pullback, and that's going to be a big buying opportunity that he's looking to get into longs. And he's expecting around the 20K mark, maybe even a little bit lower. But as always, he takes this, and I know Trav does the same thing. He takes it day by day. He doesn't go, okay, well, here's what I expect for the week. But then when something gets, when a wrench gets thrown in, he doesn't just go, no. I'm sticking to what I said on Monday, but by Wednesday, the chart might be completely different because of a lot of macro moves and all that stuff that goes along with it. So, in all honesty, I tend to believe what Shade says, and until basically Bitcoin breaks 23.3 or 26, we're kind of in this limbo zone. And he actually wants one way or the other to break so he can have some, significant signs of what's going to happen next. I've been learning a lot from him and just taking everything into account that I've learned from him and with him, but mostly me learning from him because I'm not a experienced trader in the crypto space, like on the daily, like what Trav's explaining. So yeah, I'm expecting us in the short to near future, us to break in the 20K range and right around 20, 21, 19. And then I think that'll be a really good spot to buy for long Bitcoin, basically.
Awesome addition, Bruce. I appreciate that. You're gonna have to connect me with this guy. I like what he's saying. Definitely resonates a lot with the kind of the thinking that I've been having over the last couple of days. I appreciate that he only takes things short term. He's not throwing out these insane predictions over the next weeks, months, and all that stuff. That's just something that really resonates with me, and I don't feel comfortable doing in this space. So yeah, no, I appreciate you sharing that. That's awesome. Sounds like a great mentor to have in this space here.
Yeah, no, he's awesome, and yeah, I'll write that down to get you connected. But yeah, no, he's very level headed. He doesn't take emotion into anything. He's literally just, it's all about the money. No, I know that's hard to do for almost anything in life, is to not have your emotions involved. But he does a pretty damn good job of keeping his emotions, curtailed while he, advances forward and treats his daily trading like a business. And then that's, if you're going to do that, it's a really hard way to make money. But if you're going to do that, that's you have to do it like that.
Exactly. And what a great segue into this conversation that we're going to have today about trading on whatever asset you may enjoy trading. These rules typically apply to all of them. So before we jump in, Quantic, I wanted to ask you real quick what your trading history is all about. I don't think we've had this discussion before, or maybe we have, and I just don't remember in this moment because the coffee hasn't kicked in yet. But let's hear a little bit about your background. Kind of tell us about what experiences you have with trading.
Yeah, sure. I would say that other from the fact that I try to use like machine learning and data science to do predictions of the Bitcoin price in the past, I have like a pretty standard, let's say, history in trading. So I started like 2 years ago, but I don't consider myself a trader. I'm just more of the type of people who, buys and waits, right? Like hold.
I love it, man.
Yeah, I don't know. I'm not sure if I love it, man. I'm like down 70% or something like that. And so here's the thing, that most of the people what does is what I did when I just started, right? Like you buy something based on your friend, what your friends are saying and stuff, and then you start looking at the charts and try to find some patterns, right? Like that's the most intuitive thing and way to go. Mm-hmm. And then you start learning a little bit about the fundamentals of trading and everything. And you start drafting lines on charts and testing strategies. Some of those you will probably win, some of them will lose. But what I learned with this bear market is that what matters the most is that you have an alignment between what is going to be your trading strategy in terms of your time horizon and what you're really going to do. Why am I saying this? Because at some point I was playing around, learning about this stuff and trading, let's say monthly, every week or so, and I was doing pretty well. But now that I'm down like 70%, I'm pretty much convinced that the only way I was uh, doing so well in the past is because we were on a bull market. So that's why I'm saying this is probably the most important lesson when it comes to trading. Watch out the time horizon, because what I was doing was holding, right? So I was doing some trades, but then I never changed back to fiat, right? To take profits essentially. And
Excuse me.
because of that, I got damage, which is something that has happened to most, if not all, the people. So yeah, I just really wanted to share this with you and like listen to your perspective on this. I don't know if I'm the only guy on this situation. My bet is that I am not alone on this.
Absolutely not. Absolutely not. Are you alone? And I feel like I'm just going to, I don't usually make assumptions here, but I'm going for it. I'm doing it. I feel like most people in this space right now have a very similar experience when it comes to trading in the market. In saying that, great segue. I just want to mention here, see some absolute legends once again with us here. Just want to take a moment and shout out to all you guys. We got Rascal, Guy One, The Open Chain, Amayet. Guys, it's just so great to have you here. You guys have been super consistent with showing up. We've got Mary Wolf, absolute pleasure. I saw that you said you were going to be here when you commented on my post today, and I just appreciate you showing up. Nacho, my man, absolute legend. Just appreciate your consistency as well. You're a legend. B Crypto, I've seen you here time and time again, so thanks so much for showing up again today. Means a lot, my friend. And then right back to you as well, ImmutableAlpha. Just appreciate you spending your time with us here today. And if you guys want to jump up and share your experience as well, or ask questions about anything that we're talking about, or anything, you just want to say, hey, come on up, send us a request. That's what brings so much magic to these spaces, is we get a lot of involvement, a lot of different perspectives, and it's a lot of fun. So never hesitate. There's no pressure. And let's get back to the topic at hand here. So I'm trying to think of where a logical place to start. I think that's probably a great place to start. Actually, is people with that same intention of wanting to buy and hold. And a couple of things. Actually, you know what? I'm going to start off with a story. I'm going to start off and tell you guys about my biggest plunder when it comes to trading. And that, I'm not sure if anyone else here is familiar with stocks and trading and all of that. But if you've heard of any meme stocks, you've heard of AMC. And this was my intro into trading. And let me tell you how it worked. Let's see if you guys can relate with this. So I've always wanted to get into trading. I've always wanted to learn about the stock market. I've always felt that by going to banks, at least here in Canada, when they want you to invest in RSPs and all of their different trading schemes, you basically end up paying as much as you make in profits in the long term. And that never really resonated. I always knew there was a way that you can get into the market and actually figure it out yourself and make some money yourself. So long story short, I never actually did anything about it until the pandemic hit, and I was walking around and I met a guy and he was like, "Oh man, I'm into trading. You know, it's been awesome. I'm making all this money." And immediately I was intrigued. I'm like, wow, I finally have some time. Let's chat about this. Let's figure this out. What are you up to? How do you even get started? Like, tell me everything. So he told me about this wonderful stock called AMC. And for anyone who doesn't know, I'll just quickly kind of give you a synopsis here on what that is. So basically it's a movie theater chain. And what happened was, during the pandemic, being a movie theater chain and being a place that relies on people to show up to stay in business, the theory and what actually happened was that corporations and big money and institutions saw this as an opportunity to make a ton of money shorting this stock because of these macroeconomic events. So they went above and beyond and they shorted the crap out of the stock and basically put it out of business. And some smart people, some smart retail investors on Reddit saw this as an opportunity to squeeze them out of their profits. So basically, when you go short on a stock, eventually it gets so low, you have to buy back in to cover your position. That's how you take profits. You sell at the top and you buy at the bottom. And so the idea is that all of these retail investors were going to come together and just invest in this stock. And when that happens, you get what's called is a short squeeze. And long story short, what that is you have all these retail investors or any sort of buying pressure that comes in. Eventually, they raise the price so high that it forces the people who have shorted the stock to cover. And what that means is they now have to buy back in. Otherwise, they're going to be just taking tremendous losses in likely their investors' money. And so that just will continue to drive and perpetuate price up. So that happened. It went from, I think, like $1 something all the way to $72. And everyone was hyped. People were like 10,000 Xing their investments, making a ton of money. And where my friend came in and started talking to me about this, price had already made its top and it was already on its way down. And price, I think at this point was about $35. And he kept on telling me, man, this is gonna squeeze again. You can 100x your money. People were talking about it like going up to $1,000 at one point because all these shorts were still in. And here's the data why. The one thing you need to understand is that the people with the millions and millions and billions of dollars invested, they have a hell of a lot more resources than we ever will. So if they want the price to go back down, they're going to bring it down. And not only that, but they're going to make it a long and painful process to really draw out and cause to maximize pain as much as they can for anyone who tried to basically squeeze them out of their profits. And they don't care if they lose money in this. They're going to make it worth their while. So essentially, I bought in at the top. I bought in, and not only that, but I saw initially there was a small pump after I invested. So I think I bought at $35, and then it went down to $30, and immediately I started panicking. I'm like, what the hell? Like, I just put all my money into this. Like, I'm instantly losing. Like, what the heck? I was getting all these flashbacks of going to a casino and putting money on black and the ball coming up red, and I just started to freak out. And then he's like, my buddy's like, don't worry, like the thesis still stands. Like we can make it happen. And then so I kind of just chilled, and not only that, but I put more money into it. I'm like, all right, I trust you. Not doing any DD, not looking into it at all, knowing nothing about technical analysis, literally just waking up at 6 o'clock every morning to watch the chart and hope and just fill myself with that. And eventually it went up. Price went up to, I think, $50, something along those lines. And I was stoked. I was so excited. I'm like, yes, I've almost doubled my investment. What should I do now? What should I do now? My buddy's like, bro, it's going to go higher. This is nothing. This is the tip of the iceberg. It's going to hit 1,000. Everyone knows it. I'm like, fuck, sweet. All right. So what did I do? I bought more. So now my dollar cost average was, I think, $41, something like that, or $42, $43. I'm like, all right, sweet. I'm still in profit. I'm still, things are looking good. Long story short, since then, price has gone all the way down to, I think, $3. I had no stop losses. I had no understanding of anything. Basically, I eventually bought out. I think I sold. I think it was at $20, but I basically lost just so much more money than I really could afford to lose. And I put money in savings in there as well, and just lost everything. So, well, not everything. I think I was down maybe 50%, but what is massive. And I really that was very irresponsible of me. I definitely shouldn't have done that. But there are many morals in this story to tease out. And now that some time has passed, I've processed this, I've thought about it, I've educated myself. I'm grateful for that situation because it could have been a lot worse, and it could have cost me a hell of a lot more. And not only that, it could have had, it did have, but it could have had even more profound effects on my mental health. And I want to get into all of this stuff here. So before I jump into that, because I don't want to just be sitting here ranting for hours on end, I want to pass the floor out to anyone else. Have you had similar situations to this? Are you able to relate with any of these emotions? Or what do you think a good next step might be? And I'll hand it to either you, Quantic, or you, Bruce, if you guys have any insights.
Yeah, so one, clear lesson from these stories that we are sharing here is that you should take profits, right? I mean,
Number one, yes.
number one, that's the first thing. Like when you are trading, clearly take profits when you can. I did a factor of two. You were similarly around, right? So clearly, at that point, we should have taken at least some profit, right? Just in case to mitigate the risk. In the end, all of this is about mitigating the risk and handling that in the best possible way. Because one thing that I know for certain, because I will share this story later, I know that using data and machine learning and whatever, okay, you can get some advantage, but it's not a certainty. Like no, literally nobody knows what is going to happen with the market, and you can just expect to find short-term patterns in which you can do some trades when the price is fluctuating and then take profits and move on. It's just like that. And I think that a lot of the people that trade professionally just do that. So yeah, I don't know, guys, if we have someone here in the audience that wants to share their experience. I see a lot of NFT people as well. So also, guys, this is not something that applies to crypto or regular stocks. It applies obviously to NFTs as well. And with NFTs, it's a little bit more interesting, I would say, because it's not everything correlated to Bitcoin at all, right?
Yeah, for the most part. Not the stock that I was talking about, anyways. A lot of good points you're bringing up there, though, and I'm happy that you did. If I can quickly share I'm just going to do it. I'm going to share another story that kind of highlights the lessons that I did learn, and actually ended up allowing me to make some profit. Excuse me. So I want you guys to listen to this story and think about how things went a little bit different, and then we'll talk about it afterwards. But essentially, reeling from my losses and feeling a bit depressed and feeling not very hopeful, I started doing some research and figured that there probably is still a way to make this happen. And you're on Twitter, you see all these people they're all just posting all these profits all the time, and like, man, there's got to be a way. These guys are clearly doing it. I'm a smart guy. I can figure this out. How do we make this happen? So basically, that's when the learning started. I learned some rudimentary TA. I learned a bit about trading psychology, and I learned a little bit about risk management and how to properly plan for your trades. And I think that's the between risk management and trading psychology. Actually, you know what? I was going to say, what am I trying to get at here? 3 pillars of a successful trader are those things. There's learning about charts, learning the technical skills of actually, how price action moves, how to identify reversals, all these different things. There's the second pillar, which is trading psychology, knowing yourself and knowing how your emotions will influence your trade if not kept in check. And then the last one is risk management. Know where your profit target is, know where your stop loss is going to be, where you're going to basically pull the chute and abandon ship if all else fails or if the plan fails. And and those are the 3 things. In my opinion, they are all super important, but the latter 2 are the most important. The trading psychology and then the risk management, are for sure the most important. So let me explain my next story. My next story, I was still hanging out on CT. I met a couple of friends who kind of guided me towards the NFT side of things. And I'm like, oh yeah, this is interesting. I feel like maybe we can make some money here as well. But while doing that, I learned about the crypto and was starting to get into Bitcoin and learning about all these different meme coins because, of course, all the hype is crazy, and you learn about all these things. And you can see the hype and all these profits and all these predictions on Twitter all the time. So the one that really jumped out to me was Shiba Inu at the time. And it was because it was super cheap. You can take like $10 and buy hundreds of thousands of these coins because they were so cheap. So in my mind, I'm like, all right, even if it moves up like 0.0001 of a cent, I'm going to be gold. And for some reason in my mind, that was a realistic thing to happen. So basically, I went into the trade with a different mindset this time. I'm like, all right, I don't want a repeat of what happened with AMC. I want to have a plan, take profits if it gets to a certain level, and, bail out if things aren't going in my way, because I don't want to feel that feeling of just profound loss again, of money that just I had absolutely no business of putting on the line in such an irresponsible way. So I'm like, all right, so here's the deal. I'm going to buy in now. Loosely, it seems like a good time to buy. Honestly, in hindsight, it wasn't. We were definitely like at the top of a single pump. I got lucky because of, like you said, Quantic, that we were in a bull market. Don't think I would have made a similar move, at least not in the same way that I did back in the day. But nevertheless, I digress. So I'm like, all right, here we go. Let's buy in here. I think I'll put in like a couple $100. If it moons, amazing. If not, I'll take profit at, I think it would have been like 2 or 3x. And then I'll bail if I start losing, maybe $100 or something like that. I'm like, all right, sweet. And lo and behold, price did skyrocket a fair amount. I just, like I said, got super lucky that the bull market was on. New highs were being had. And I was able to actually pull a decent amount of profits, nothing generational wealth or anything like that, but decent profits, which for me at the time were huge and would definitely helped soothe the loss of what happened with the AMC debacle. So it actually made a couple of highs, and I always took profits on pullbacks. I was like, all right, I see prices going down. I'm immediately panicking. I'm like, fuck, I don't want to lose all my money. So I bought profits. In hindsight as well, if I would have waited for proper sell signals, I could have made even more money. I'm glad I did what I did because at least I took profits, and there is never anything wrong with that. But I could have maximized it. So that kind of goes into, the whole having a trading plan, having levels set on your chart, having a concrete plan, not just a vague idea of what you're going to do at what point and all of this stuff. But yeah, long story short, came out with some profits, and I had put a bit more thought, and it was definitely more intentional. And yeah, definitely kind of helped reignite the fire of, okay, maybe I can do this. There were definitely many lessons afterwards that I'm happy to get into as well. But let's dig into this one a little bit. Let's take a look at, in both scenarios, for the AMC scenario as well as the Shiba Inu scenario. Let's take a moment and let's try and figure out some of the main lessons for each one. Bruce or Quantic, I'll let you guys start. Any thoughts on that? What are some of the biggest? Let's start with the lessons from the loss here. Let's go there. Actually, ImmutableAlpha, I see your hand here. I appreciate you jumping up. I'd love to hand the mic over to you first here. It's all yours.
Sure. Hey, thanks, Trav. This is my first time joining you guys. I really enjoy it. Just thanks for bringing me up on stage here. I've been to a lot of these spaces over the last little bit, and I've found that very few of them actually deliver real value and actionable things that you can take away. So I'm definitely already getting that from the time here in the first few minutes of this one. So thanks a lot. Yeah, I think honestly, totally you nailed it with those three things that you talked about. And I think the biggest thing comes down to psychology and just, our brain has a tremendous ability to try to protect us from, what it perceives as pain. And so, the biggest thing is admitting that you're wrong is something that shows weakness and creates, I guess, what is seen as pain for your brain, and showing that you're wrong. And so we have an ability to try to, I think it's called recency bias or confirmation bias, where you try to just take the information and try to, even though all the data and everything coming at you is saying that you're wrong, you try to justify it and justify your decision to try to prove that you may be right. And so I think, this is where I found that I struggle the most, is once, a trade goes the wrong direction. And this is why it's so important to have a plan ahead of time of, when you're going to be invalidated. I think some of the best traders that I've followed, talk about that before they even get into any investment, they, three times as much try to prove themselves wrong, to try to poke holes in the argument. But it comes down to having a plan, knowing when you're going to become invalidated. And then the most important part is the execution, which is when you are invalidated, actually sticking to your stop loss rather than continuing to ride it thinking that, oh no, it's going to come back, and continuing to move your stop loss lower. So I think this is the most important thing that I've found. And however you do it, I think most importantly, it really is something that you can only really build this skill over experience. Hopefully not through too much experience the hard way. But for me, what's been really helpful is investing in things that I know and that I understand. So I've made a commitment in the last several months to not be jumping into whatever the latest FOMO thing is, whether it's bonk or blur or whatever else is coming at you. Or this AI trend, if I wasn't already positioned in any of the coins, just for the sake of doing it. I think so. What's really important, especially right now when we're at kind of the bottom formation of the market, where the majority of the opportunity is still ahead of us, is making sure that you're truly doing the research and investing in things that you understand. And the big reason for that is that when your trade or your investment idea becomes invalidated, when you understand it and you know what you're in, you're going to have a very clear, much more clear picture about being truthful with yourself and knowing when it's gone wrong, and knowing that it actually is going wrong. It's going to be harder to lie to yourself to try to justify that, that it's okay if it's not, if you have all the information. Whereas if you're just kind of blindly FOMOing into something because someone said that it's good, and then goes the wrong direction and you're still holding it, it's all just based on, limited information anyway. So, yeah, I guess, does that kind of make sense?
100%. I'm just listening to you say these things. You've brought up so many very, very important points, and I am ecstatic to be able to jump into each and every single one. First of all, ImmutableAlpha, just awesome. I appreciate you joining us. I think first and foremost, appreciate you sharing your feedback about the space. That's super validating to myself, and I will speak on behalf of Quantic, even though it's a bad habit to get into, but I know he appreciates it as well. Sorry about that, Quantic. Oh my goodness, I gotta chill out a little bit here. But that really means a lot, my friend. Honestly, this is what we're going for. We don't want it just to be an education or entertainment value. We want to have a little bit of that, but we want to focus on actually providing some value and worth. So thank you so much. I see you, Bruce. I just want to quickly just address one or two more quick things here, and then I'll hand it over to you. But some quick things here. Confirmation bias. We will definitely dig more into that. The key is to avoid that at all costs and be as objective as possible. And this is precisely the way to keep the emotions from overtaking your trade. So the two main ones are greed and fear. There's a spectrum. You want to stay away from the ends of the spectrum, and you want to keep your emotions in check somewhere within the middle. You will never, ever eradicate these emotions. The idea is you want to mitigate them and identify them before they take over and influence your trade. So really, really appreciate you bringing up that specific term, confirmation bias. That's incredibly valuable. I've written it down. We will jump into that. Also, the idea of sticking to your stop loss and not moving it, the number one way to let greed or fear, most in this case, fear from taking over and influencing your trade, is adjusting your stop loss. The greatest technique or the greatest piece of information that I ever received about trading was to, before you even start the trade, input your stop loss and profit target. That way, whenever you actually whenever you actually initiate your trade, you can literally walk away from your computer. That way, you're not just going to sit there and stare at it and just hope that it goes either one way or another, or get depressed if it starts going down. This just changed the game when it comes to trading, because this way you have to trust your thesis. You have to trust it, and you won't be tempted to either adjust your stop loss or adjust your profit target as well. Both important things to keep into consideration. So that amazing point. And I'm really happy that it came up this early into the game.
I wanted to jump here just 1 second, Trav, and interrupt you, because I wanted to take a step back to kind of explain, if you can explain what is a stop loss and
Love it.
The profit target, so that people in the audience can learn about it.
Excellent. Thank you, Quantic. This is exactly why I need you in my life. Immutable Alpha, did you want to take one of those? Happy to share the mic with you if that's something that you're interested in. Otherwise, no stress. I'm more than happy to jump into that as well. But I did want to extend you the offer for being up here.
Yeah, it's your space. I'll let you carry away if you want to. I was going to say, I actually built a bull market guide that's pinned to my profile that people can check out later if they want. But it goes over all of these kind of topics individually to help people kind of prepare themselves to. And I think stop losses was one of them. But no, I'll let you go ahead. You're on a roll. So
awesome, man. Awesome. Well, thank you so much. I've actually pinned up your tweet to the spaces on top here, so it's there for people to take a look at. I'm excited to dig into it. That looks awesome. It's through Substack. That's fantastic. I'm really excited to jump into that, my friend. Thank you for sharing that with us. That's really cool. Okay, so profit target. Let's start with that one. Profit target. It's basically self-explanatory, but there's some nuance to it. So profit target is a level on your chart that if you set an order in an appropriate way, price your. I feel like I need to stay focused in this thought. So profit target, in all intents and purposes, is a level on your chart where you are going to basically sell the asset that you bought. I'm going from a perspective of buying. You're going long in a play, basically, which means you're betting that the price of the asset is going to go up. Now, once that price hits a certain level, so let's say I bought in at $5 and I expect price to hit $10, but I set my profit target at, let's say, $9 just to kind of maximize the possibility of taking profit. That essentially would be my profit target. Oh my goodness, profit target. I need some help here. I'm losing it. Anyways, you guys get what I'm saying here. So basically, that if you're using a trading platform, that's something that you can set ahead of time. So before you even enter the trade, you can actually set your profit target, your buy-in price, and then as well your stop loss. So before I jump into stop loss, does that kind of make sense? Did I ramble on that too much? I mean, it's pretty straightforward, but do you guys have any other questions or you want clarification on anything about that?
I think it's pretty clear, and then we should discuss where to put that. Is it at a 10% gain, 10 times? That is something that really much is going to make a difference when you're trading, right? So
100%.
Anyway, let's continue with the stop loss.
Perfect. So let's yes, I appreciate you bringing that up, Quantic. We'll definitely jump into that here real quick. That's fundamental of risk management here. So let's talk about stop loss real quick. Essentially, it's the opposite of a profit target. It's the price that you determine where, let's say you're going long again, you expect the price to go up. This is a level on your chart where if the price drops by X amount, basically you're going to sell. You're going to exit your position, and you're not. Basically, this level it disproves your theory that you came into the trade with that you came into the trade ahead of time with. It disproves your thesis that the price is going to continue going up, and it's going to automatically execute this trade, and it will sell any assets that you have as a way of protection. It's saving you from receiving any further losses. If so, let's say the price just decides to plummet after that, you're going to be very thankful that you actually had that stop loss in place, because now you lost only, let's say, 10% as opposed to 60% if the stop loss wasn't there. This is really important as well, just to take off that mental pressure, because if you don't have a stop loss, imagine this. Imagine you've bought into a trade and you don't have a stop loss, and you're buying and holding this asset, and it's kind of going up and down and up and down. It hasn't really hit your profit. And then all of a sudden it starts going down. You're like, okay, maybe it'll go back up. Maybe it'll go back up. But then it keeps on going down. Like, should I get out? Should I get out? What do I do? You have all of these fears, these emotions of uncertainty and fear. And, by that point, you're not in a good mind space to be making that trade. Or to be making decisions about that trade, because these emotions are in full force and they're basically in control. So, that's basic explanation of a stop loss, and of course it goes much deeper into that. But Immutable Alpha, I see your hand up. I'd like to pass over the mic to you.
Thanks, Trav. Yeah, I think that's exactly it. Is that it takes the pressure off. And it's funny, even if you're in a loss and the stop loss hits, as soon as it hits and like you're out of the position, and just the fact of not having to think about it anymore takes some of that pressure off and makes you feel good. But I just wanted to add on to what everything that you were saying there. And one of my favorite places to use a stop loss is not necessarily when you have a position that's losing money or is in the red. One of my favorite places to use a stop loss is that, let's say that you get into a trade and you buy it at $1, your target is $2, it's up at $1.50. Now, you still have the sell order in at $2, but some of the platforms, I think Binance, you'll have to check your individual exchange, but some of the platforms have an option where you can do, generally it's called OCO, or one cancels another. And that is that it's basically you can put two different trades in at the same time, one for selling it at $2 and one for selling it above $1. So basically you're guaranteed to sell this whether it goes up or down. And the worst case scenario is that so what I'm trying to get at is to use a stop loss once your position gets into a profitable place. Put a stop loss above where your entry was. So the worst thing that can happen is that you're going to make money on this trade if it goes back. And it just it holds you back from doing a full round trip and ending up going from something that was good, it totally played out how you wanted it to, and then next thing you know, it turned the other way, and then your emotions are getting ahead of you because you didn't plan for what's happening on the downside, and it just starts to spiral. So it goes up, you put a stop loss at $1.10. Worst thing that can happen, if it comes to $1.10, you get taken out. And there's two ways that you can do that. You can do one that's called a limit. It would be like an absolute stop loss. So it could be like $1.10. And you can do another one that's called a trail stop, which basically you can trail it a percentage or a dollar value below the highest peak that the price goes from this point forward. So let's say when it's at $1.50, you put the stop loss in at 110. You could do that as a trail. So it could be, as it goes to $1.50 now, or $1.60, now your trail goes to 120. And so you can, your stop loss will trail up as it goes up, but then when it comes down, it doesn't go down again. So I just wanted to share that because I think that's really my one of my favorite ones. Is you get in a trade, especially in the bull market where you're trying to accumulate the coins, is you buy it. Worst thing that can get into the green immediately. Worst thing that can happen is you get taken out. And because in the bull market we get these crazy volatilities, especially on the alts. Like you could have like a 20% single candle, and then next thing you know, the next day, like everything's back up, new all-time highs. So you can really play it and make sure that you can capitalize on the volatility.
Awesome point, man. Thank you for bringing that. There's definitely a couple threads that we can pull on in there. First of all, the idea of trailing stops. I love that you brought that into the picture. The fact that stop losses are versatile tools, and not only can they save you from sustaining incremental losses, but they can also ease your mind and protect your profits as well. That's actually, there was a phase in my trading where that led to the most consistent period that I had in trading. Was that concept is once I hit a specific level and kind of I'm seeing that I'm staying over that level, I raise my stop loss so that I'm guaranteed, let's say 15% profits, regardless of what happens. And that basically was the catalyst of, I think it was a couple of months of basically being in the green and feeling really good about my trading. So really appreciate you bringing that up here. There was one other, the idea of volatility and massive price swings. I just want to plant this here and we can talk about it later or maybe even in a different space. But there's also the concept of stop loss hunting. And this is probably something for a whole other chat, but we're talking about stop losses. So it's important that we bring it up. And it's the idea that I've mentioned this before, but the idea of liquidity hunting or stop loss hunting, basically you will see a fake move before the real move is one of the scenarios where you will see this. So let's say you have a stop loss set in place, and likely based on what you're seeing on the chart, a lot of people, it's a logical place for people to place the stop losses. So in the reality, it's not going to just be just you who has a stop loss there. It's going to be hundreds of thousands of people across the market who have also identified this level and who've placed a stop loss in this specific region, because if price goes there, it's basically going to invalidate their theory that the price is going to continue in the direction that they think it's going to continue to. So what you will see in situations like this are usually we have the concept of volatility, contraction, and expansion, which it's pretty straightforward, but you can see this on different chart patterns where you have price, it like basically squeezes into the pinnacle of a formation. Basically, volatility is getting lower and lower and lower and lower. People are like bears and the bulls are battling back and forth. They're driving price into this one. Basically, it's a point of essentially at one point, one of the two is going to have to make its move. The bears are going to have to step up or the bulls are going to have to step up. And this is likely going to be the point where that happens. A lot of the times, and there's a bunch of theories as to why this happens. My own personal theory is that, the institutional buyers who really control how the markets move, they will see this as an opportunity. They think the price is going to go up. Everyone thinks the price is going to go up. But in order for them to get their money into the market, because they're basically trading with millions of dollars, they want one last opportunity to buy price at a really, really low spot before it goes and skyrockets and they can take profits. So what would happen is they will intentionally drop price to a level where it's going to break that stop loss area, and it's going to trigger all those stops. So all those people who put their stop loss there, their orders are automatically going to sell. And now they have all of these shares or assets or whatever it is available on the market. They're going to scoop all that up, and that's going to send price basically shoot price up. And then, they'll have all of these shares or tokens or what have you. And not only have they increased their profit potential, but all these people who set their stop loss at this specific level, they're now out of the trade, and they've missed out on all that potential profit. And even likely, a lot of people will buy short, which means they'll bet against the market. They'll think it's going to go down once it breaks that level. So all of a sudden, all these people are going to be screwed, which actually increases the volatility. So it's going to make that move even more dramatic and basically increase the amount of eyes that are on that asset in any one space. I'm realizing I'm kind of going way down the rabbit hole here, but hopefully that makes sense. I want to pass it back to you, Quantic, or back to you, Immutable Alpha, or you, Bruce, just to kind of save me from going down this rabbit hole too far.
Actually,
I will
sorry. Go ahead.
Yeah, please go ahead, Bruce.
Yeah, Bruce, here. Why don't you jump on the mic here real quick?
Yeah, sure, no problem. So yeah, I know it was probably about 20 minutes ago, but when I briefly had my hand up, I just wanted to touch on some of the stuff that Trav and Immutable Alpha was saying. Thanks for joining, by the way, Immutable Alpha. We always love to see new faces in here, so that's great that you stopped by and you already got value from the space. These guys, Trav and Quant, I luckily stumbled upon their space about the first week, so 7 weeks ago. So that was awesome. But anyway, so my personal experience with the whole trading and the emotions and the, being accountable for basically the money you're putting up for this kind of thing. Now, look, okay, I don't think there's anybody in here who strictly makes, they're living off of trading. I could be wrong. There could be somebody in the crowd, or maybe Trav is, not telling us everything, and he's just pumping his bags like crazy. But basically, we're all trying to make extra money, and maybe in the hopes of one day getting to a point where we could do that. Now, me personally, with my experience, I don't want to trade every day, like for a profession. That stuff is. It's very hard, like Trav and Immutable Alpha were saying, like it's really hard to control all these outside factors. Not only do you not have control of the markets, obviously, because there's people with just immaculate resources at their fingertips to adjust prices, move them. They could be a head fake, it could be actual real move. It's a lot of information to take in that moment when you're trying to buy a stock or a meme coin or whatever it may be. And my personal experience with this happened the first time I really got into it was when I first kind of heard about crypto like 4 or 5 years ago. It was 2018, I believe. And I believe we were pretty much going right into a major bull at that time, because I remember buying a bunch of, at the time, they were just shit coins, but I didn't know that they were shit coins. I just thought they were small coins that had a chance to turn into something really valuable, like maybe not Bitcoin, but like, oh, maybe this will turn into a Litecoin, or maybe this will turn to Ethereum. Because I had a friend who actually I had met about 6 months before that, or maybe a year before that. And then when I got to know him, he actually told me, oh, dude, I wish I would have met you 6 months ago, Bruce, because 6 months ago, I sent out an email to like 700 of my family, friends, relatives, like anybody that I thought like this would be a helpful tip for them. He basically wrote a 2-page email that explained why Ethereum was a great buy at $80. And so maybe this is maybe a little bit longer that like a year even before that. And I was like, holy hell, his name was Noah. And I'm like, Noah, how did you figure out that Ethereum was going to just like blow through the roof? And he kind of told me his his reasoning, and he didn't tell me everything. Obviously, he didn't want to sell his secret sauce, and I was like, damn, that's crazy, man. Like, wow, what a great trade. And he's like, yeah, man, like my only person that listened to me was my dad, and his dad made a boatload of money. So anyway, fast forward to like the year later, I'm like, you know what? I just made a Binance account. I'm going to see what I can do. Like Trav was saying, I'm smart enough. I can figure this out. And I think it was a mixture of me being lucky and me timing it really well. And also maybe I picked one of the coins that just did well by happenstance. Maybe a little bit of research was done at the time. I was pretty green and not, very knowledgeable about the space. So anyway, I bought a bunch of XVG. I don't know if anybody remembers that one, but it was also called Verge. And I bought it at, I want to say I bought it at 2 cents, 2 cents, 3 cents, 5 cents, and 7 cents. And that shit pumped like crazy. And I put in like 400 or 500 bucks. And by almost Christmas time that year, I had like $20,000 in my account. And that was a very significant amount of money to me at the time. And it still is a significant amount of money at this time. I did take a little bit of profits, but like Trav and Immutable Alpha were saying, like you get the FOMO in your head, like, oh my God, I'm so smart. Like I just made 20, like I almost made like 20 grand in like 12 days. Like this is amazing. Like I can do this again. But in reality, like trades like that are so rare. And because I was so green and I was so inexperienced in trading, I actually only made like a couple grand on that trade. I lost the rest of it because I wrote it all the way back down, and was like, no, like there's no way, like this is going to happen because of, they said this was going to happen with the coin, and they said they're partnering with this person. So I really wish I knew what a stop loss was back then. Like, I think that would have saved me so much money, and it would have been a great lesson. But looking back at it, hindsight is always 2020. Actually, I'm happy that I went through that, because now I have an understanding of, okay, when you're approaching markets like that, especially that you're not really familiar with, you have to really proceed them with caution. And another thing that Immutable Alpha and Trap touched on, like, it's really, really hard to listen to somebody. Like, if there's somebody in the crowd that's listening to me right now, and then they go through this in 6 weeks, like, what's probably going to happen is you're probably going to have to take those wounds and those bruises on your own for it to really sink in. Because just with my IRL job of teaching, like, basketball skills to kids and to high school, college, and some overseas pro players, like, when you're teaching them something, it's the same. It kind of goes in with life in general. Like, when you teach somebody something, a lot of people are really skeptical, and as they should be in certain aspects, but like, they don't really want to listen to anybody. Maybe this is just Americans in general. Like, we don't like listening to people unless, like, we don't like people telling us what to do, in general. But like, in my experience, it's very, very hard for somebody just to listen to somebody unless it's someone that they super duper respect. Then maybe it's not as likely. But until they go through it themselves, they really have no idea of how to handle that situation until it's like in their personal life and it affects them. Then they might have a completely different outlook on it. So like I said, I probably wouldn't have been able to listen to somebody say what I'm saying and been like, oh shit, like, all right, well, I better be really cautious and careful when I'm jumping into a market that's brand new to me. So yeah, you a lot of times you're gonna have to take those those bumps, bruises, and wounds, and just learn from your experiences. I always feel like experience is the greatest teacher, but at the same time, if you can use your brain and not have to go through all that trials and tribulations, you can learn from people like Trav, Immutable, Quant, myself, anybody who has life experience. That's a big asset to learn from. So yeah, like, the whole stop loss thing is a great point. Like, if you have a trade that you buy at $1, like, let's say the stock you're buying or the coin you're buying is at $1, and you put in $100, what are you comfortable with losing? Are you comfortable losing $50? Are you comfortable losing $10? Are you comfortable losing all 100? If you're comfortable losing all 100, well, then there's no need for a stop loss, and you're just in it to gamble. But if you want to try to protect your trades, set it at 80. Set it at 80 cents, so you could lose $20. But then I feel like stop losses are probably the best barrier for a trader to limit damages, because okay, if you put it in for 80 cents at the stop loss when you bought in at $1, like, cool, you lost $20. That's not gonna change your day one way or another. But if that coin pumps to like $7, like, okay, then like what Immutable Alpha said, that other one, I've never heard of that, the COC, I think he said it was, it's where you have it, the new one that you can protect yourself again. That's a great asset to use. Like, do that. So yeah, in my experience, when you're doing these type of trades, one, have a plan like Trav said. Go into it not thinking that you're going to get a Lambo or that you're going to be able to pay off your house in a month. Like, those are unrealistic expectations. Two, not only have a plan in terms of like what profit margin you want to take at, but also, if I mean, now in 2023, I think every exchange has the stop loss option. I'd be surprised if they don't. Please take a second to look it up on YouTube or do some research on your own and figure out exactly how to do it. Or maybe they have a tutorial on your certain exchange that can walk you through how to do it on their platform, on their screen. That way you really know what you're doing. So yeah, so I'll leave it at that. But yeah, it's just, and the last thing, don't let your emotions get the best of you, because like Trav was saying, like, if you go into something and you pump it and you make a bunch of money. I actually bought into that AMA thing as well. But I luckily got out after I realized it was really like, oh damn, like, everybody kind of seems to be saying the same thing here. This is usually not a good sign. I ended up just taking out my whole investment before I even, like, I put $1,000 into the exchange. I was getting ready to buy. And then, like, the day before I was going to buy, like 2 days later, and the price was somewhere around what Trav was saying, like 30, 35 or something like that. It was at its peak. I just sent the money back to my account. I was like, you know what? I don't think this is going to be profitable more times than not. I'm just going to, like, if I miss out on the boat here, I'm going to be kicking myself, but I really don't want to lose $1,000 on this. So, I'll leave it at that. But great information by Trav and Immutable Alpha. And just, yeah, guys, just remember to always try to have a level head. That's the biggest thing, is like, try not to have too far to the left or too far to the right. You want to kind of be somewhere in the middle, and generally in most things in life. And I'll leave it at that.
Bruce, my man. Wow. Yeah. A lot of value in there, my friend. I think the fact that it was so personable really brought it to life. The fact that you're speaking from experience brought it to life, and you bring up so many different avenues where we can now go down and address. So we're at a bit of a crossroads. Where to go from here? Where to bring this conversation? We have a bunch of very important options. I'm thinking it'd probably be best. Let's start at the fundamentals. Let's start at. I'm just trying to think here. You know what? Correct me if I'm wrong, Immutable Alpha, Bruce, Quantic, but maybe just talking about strategic ways to set your stop loss and profit target might be a good place to start. 'Cause the other ones that I know are super important are the trading psychology. Like that's just so incredibly important when it comes to trading. But it might be wise just to actually talk about, you know, how to set realistic expectations for your trade to help mitigate those emotions to begin with. What do you guys think?
Yeah, I think that's a good idea, because that actually is connected with one of the three pillars that you mentioned before. In this case, that would be tied to risk management, right? Because you can set those stop loss and profit target based on that. Like, how much are you willing to lose, or how much are you comfortable retiring from a position, things like that. So maybe here, Immutable X can give us Immutable Alpha can give us some opinion about his experience.
Love it, man. Love it. Yeah, you know what? Immutable Alpha, I'll let you jump in anytime you want. If you have anything that you wanted to add right away, by all means, it's yours. Otherwise, I'm happy to jump into, you know, my thoughts on this. Perfect. I see your thumbs up. Let's get to it. So basically, the first thing I think that it's really important to express here is that risk management is going to look very different for everyone. It's a very personal choice, and there's going to be a lot of influences that are a lot of different variables that will influence, you know, what appropriate risk management is going to be like for each specific person. And also, it's really important to remember risk management is going to be different depending on your trading style as well. So whether you're a long-term holder versus a scalper, where you're in and out of a trade within seconds to minutes, rarely more than half an hour, everything's going to look different. So I think a good way to approach this is going to be to look at it from percentages that you're willing to risk, and a percentage that you're would be realistic for you for a profit target, essentially. So one other thing that's going to be important, that's going to factor into this, is the longevity of your trading career as well. Being someone who wants to make this a sustainable thing, where I want to have growth over a long period of time and not have massive volatile up and down, like basically the amount of money. I don't want my portfolio to like go up and down, you know, in a way that's very volatile. And that's, you know, there's nothing wrong with that. There's a type of person out there who can manage that. But for me, for my mental health, for where I'm at, I am more comfortable seeing slow incremental wins over a long period of time, where the wins are more profitable than the losses are the opposite. So where to go from here is an important distinction. So basically, yeah, I'm gonna go into this from my own perspective of wanting small incremental wins over a long period of time. So basically, let me start by just kind of telling you guys what my strategy is. Recently, I have been mostly swing trading. So I'm opening and holding a position for sometimes hours, sometimes days, sometimes weeks even. And the way I like to do it is I'm going for a ratio of profit to loss. So in order for me to, achieve my trading goals, I want to have a prediction for price where I believe that I can get a 2-to-1 profit ratio. So what does that mean? So let's say I'm just going to make an easy, like a make-believe asset just for the sake of easy math. So let's say that there's an asset. Right now it's trading at $1. I believe that actually no. Well, first of all, let's start by stop loss. So I am willing to risk, let's say, 20 cents on the dollar. So if I lose, let's say I just bet $1 on this asset that costs $1. If it goes down 20 cents, I'm down 20% of my portfolio, and I'm okay with that. What I want from here is it's going to be a mix between where I realistically think the price will be able to get based on my theory, but also I want to capture at least a 2-to-1 risk to reward ratio. So if I'm comfortable with losing 20 cents on the dollar, I want to be able to make at least 40 cents. Now, why is this the case? Basically, if I'm looking at it from a long-term view, so let's say in the next, year, I'm going to place 100 trades. I only actually have to win something like what's the math here? 60%, just over 60% of the trades to come out at the end of the year in profit. So that means that basically the reason why that's so awesome is that it basically makes it so I don't have to have or don't stress about having such a pristine trading setup strategy in mind. Losses are inevitable. There's nobody out there who has 100% win rate. And if they are, they're certainly cheating. I know people who have very high win rates, but they are very, very few and far between. I think the person who I know who has the highest win rate is maybe 80%. And that is like extraordinary. That is extraordinary. I think even having a 60% win rate is very realistic. But even I know people who are profitable in the long term, and they only win about 40% of the time. But that's because they adjust their risk to reward ratio. They would win, let's say, they would set a standard 3-to-1 profit target ratio. And it doesn't even need to be that high to be able to win that, be profitable off 40%. But for every trade that they lose 20 cents, they're going to gain 60 cents. So let's take a pause there. Let's process that. Maybe ask some questions. Bruce, I see your hand up. Mike's yours, my friend. What do you got?
Really quick, because about you talking about win percentage, and this brings me back to when I used to bet sports all the time. And the best, I don't know if anybody has bet sports or they bet occasionally on sports. I just, for fun now, bet sports on occasion. There was about a handful of years in a row where I was trying to make it my full-time, making money betting sports. And it was a grind. It was really, really hard. I didn't make it to where it could be something that I could do daily, because it's just such a grind like trading is. It's an incredibly hard thing to do, to sit at a screen and try to scalp point spreads on basketball, football games. And anyway, I could talk about sports forever in this sense too, but I'll just keep it to this. The best sports bettors in the world, this is going to sound like ridiculous because it's not even that high if you're looking at it from someone who has no idea what it is. But the best sports bettors in the world, on their best years ever, they're winning 60 games out of 100, in a 100-game sample size. So let's say they're betting 1,000 games a year. They're winning 600 games, in their best years. On average, the best sports bettors in the world average winning 57% of their bets. So anytime you talk to your buddy or you have your friend who thinks he's a know-it-all in sports and says that he wins all the time, like he's full of shit. Like he just wants to make himself feel good. So literally, like Trav's saying, he said like he'd much rather have the small wins accumulate and stack over time. That is that's just such a level-headed, smart way to approach it, because yeah, you can hit a big score by in trading. It would be, a trade going like a 20x, or in sports betting, if you're betting a parlay that hits. But just like in trading and in sports betting, if you're betting sports, you want to do single wagers, straight wagers, which is like you're just betting on a single game and it's just the outcome of that one game. And in trades, it's like you want to just take a little bit of profit, because those big ones are so far and so few between that's not what you should probably be sitting and waiting for. But then, like to Trav's point, it's like, what is your risk management? What are you comfortable with? Like, how long are you comfortable having the trade sit out there for? So yeah, just to finish up on Trav's point, there's probably no real traders out there that are winning 80% of their bets, but they might have a year where they're knocking off 80%. Like it's like everything's aligned for them. They're doing great technical analysis. They're hitting it at the right time. It could be, a little pump in the market. But most traders, like if they hit like that, and this is going to be a little bit higher than sports betting, but if you're hitting in that 60% range, like Trav says, you're going to be doing great. Like, and the amount of money you're betting doesn't matter. It's all, it's all individualized. If you're comfortable wagering, or not wagering in this instance, but, putting $100 per trade on average, then stick with that. Don't go outside of your means. There's this thing in sports betting and in trading called bankroll management. And if you don't have bankroll management and you're just flying into every trade or every bet, like betting a massive amount of your bankroll. And for those that don't know, a bankroll is the money you have set aside specifically for trading or betting. And that is actually one of the biggest things that in the sports betting world, and I'm sure in the trading world as well, where people go broke because they have no real way to quantify how much they should actually be betting. And in sports betting, you should be risking at maximum 1% of your bankroll on a single bet. So you should take that right over into the trading world for crypto and stocks and meme coins. You shouldn't be betting or wagering or putting at risk more than one. And I guess if there's a really advantageous trade that you think, oh my God, like I'm getting in this at a really good time, this is a great spot to buy into this one, the most you should be able to be putting into it is at the super duper max, and these are really rare instances, is 5%. But you typically want to be putting 1% on average at most risk. And like Trav said, everyone's risk management is different. But if you want to stay in the game and you want to keep participating in trading stocks, meme coins, crypto, or betting sports, you really have to have a insane amount of discipline for risk management. Otherwise, your emotions will kick in and you'll eventually go broke. And I'll pass it back to Trav.
Amazing, Bruce. Amazing. Thank you so much. There's a lot of really important points there that you brought up that I very much appreciate that you did. The one about, the actual percentage that you should risk, I'm so happy that you brought that up. That's on my list here as well. And basically a way that I think about it is if you risk 1% of, like in my trading, I call it the portfolio, but I forget what you called it. It's the bankroll. I like that a lot, actually. That's a cool way to look at it, to visualize it. Anyways, let's say you risk 1% of your trade every bet. It's going to take you losing 100 trades back to back to basically lose all of your money. Actually, probably if you're doing it from a percentage wise, you would adjust that 1% based on how much you win or lost, or is one way to do it. So you can actually make it quite a bit longer than that. Maybe now I'm doubting my math, but regardless, for simplistic terms, if you bet and lose 1% of your portfolio, it's going to take you 100 bets to basically clear out your account. Now, the likelihood of that happening is very low, and for a couple of reasons. You will have done your research, you will have created your trading thesis, and if it's a solid trading thesis with even a 50% win rate, and you bet 2-1, that's the math dictates that if you stick to your trade every single time, you will come out ahead. And this is the premise on, changing your trading practice from gambling to actually trading is you're doing all the math, you're putting all this preparation into place before you're actually sitting down on your desk and logging into your exchange and placing your bets. And you're coming in with all of this information predetermined so that the math is in your favor and you're not just going out on a whim hoping that this is the time where it's going to skyrocket and you're placing a bet and you're hoping for the best. You're coming into this calculated, prepared in a way that will help, that will mitigate the emotion going into your trade, because you already know what exactly you're looking for on the chart to be able to enter the trade, but then also mitigate those emotions while the trade is in play. And those, in my opinion, are some of the hardest emotions to actually keep a handle on. And this is why it's so important, in my perspective, to have that game plan ahead of time so you can execute that trade and then you can just walk away. And this is especially pertinent. And this is a huge reason why I like to swing trade, is that's what I do. I set my trade and I just leave it. And then maybe I'll take a look at the end of the day. Maybe I'll take a look at my portfolio at the end of a couple of days. And if I win, great. I've got profits. My portfolio is up. But if it's down, that's okay too, because I anticipated that. And I know that you can't win 100% of the time. So let's kind of put a pause on this as well. Let's take a moment to digest and think about what, like, all the stuff that we've just thrown out there. It has been a lot, and it's very complicated, and there's a lot more to it as well. But in the meantime, I'd like to invite anyone, if you have any questions about any of this, if you have any experiences you want to share, by all means, put a request on to come up. We'd love to hear your perspective. I'd love to answer your questions. They're very, very complex topics that, for a beginner, are complex. But once you spend some time and consider them, and like ImmutableAlpha was saying, the best way to learn any of this is to actually get your skin in the game and learn from experience. This does become very standardized and very efficient and understandable. So to the guys up here with me right now, ImmutableAlpha, Bruce, Quantic, how are you guys feeling? Where are you guys at? Any questions? Any points of clarification? Where are you guys at?
I feel that all of the information that you and Bruce and ImmutableAlpha have been sharing is so valuable. So we are going to have a very nice thread once we finish this space, like summarizing all of these important points. And I believe that in terms of the time, because we are getting closer and closer to conclude this space, we should maybe devote a few minutes to talk about the psychology behind trading, right? Which is one of the most important things.
Yes, absolutely it is. And I appreciate that pivot, Quantic. That's fantastic. And I think a good way that we might be able to approach that is from the perspective of how to get started. How do you go from either not trading at all to jumping in and getting your hands dirty and doing it? Or even, I've been trading like a degen for the past year. I want to start over. I want to come about this right. So let's do that, if that makes sense to you guys. And again, if you guys have any input, feel free to jump in. Otherwise, I'm just going to monologue here for a little bit, and I'm more than happy to do it because I love this stuff here. But so let's go. First of all, I guess from a macro perspective, trading psychology. I touched on this earlier, but when you trade, there's a continuum. There's a spectrum. And on one end of the spectrum, you have fear. Picture a scenario where, like in the beginning of the space I was talking about, I had these losses. They were, I had no stop loss. Things were getting worse very, very quickly. I was losing money that I didn't have and I couldn't afford to lose. I am basically panicking at that moment. Like, I can't believe I'm losing all this money. Like, this is insane. What is wrong with me? How did I end up here? I'm down, like, let's just say $1,000, and like that's my mortgage payment. Like that's crazy. Like my wife, my family, they rely on this money. Basically, you're in sheer panic, and fear is dictating your behavior. It's dictating your thoughts. It's dictating it is your emotion. So that's one end. The other end is the opposite. It's greed. And the underlying emotion there is like elation. You know, you're on top of the world. It's a hyperinflated sense of confidence. It's, man, I could read this market like a book. I know I can put this money down here and look how good I am. Frig, I called this a mile away. Let's throw out my 100x profits on Twitter. You know, like, man, I'm going to hold and I'm going to stay in this trade and I'm just going to keep on going up. It's like you're basically feeling on top of the world and you're untouchable and you're bulletproof and you have all of this trading thing dialed, equally as a destructive emotion to have. And I'll give you a quick story about, or actually, Bruce, your story definitely addressed, you know, how that can be destructive. And in my experience, there's two specific pathways to how destructive it can be. The first one is you're going to miss out on a lot of potential gains. Like you were saying, like tens of thousands of dollars, Bruce, you could have walked away with. And that would have been life-changing money. That would have made your life so much easier in so many ways. Yet greed was there. It was present and it was driving the ship. And you're like, man, I can get more. And not only did you lose out on those gains, now you have to deal with the residual effects from having lost all of those potential gains. And that's tough. That can alter your trading history and then lead to the other end of fear, where that will also influence your trades. And that's the second thing, is as soon as you start to lose control of the spectrum, these swings in fear and greed become a lot more dramatic. So let's say you're in this scenario where you're up 200x, you're feeling on top of the world, you're committing to still holding because you want more, greed's taking the lead, and now price starts going down. That fear is going to grip you so much harder now that you've been in a place of complete elation, and it's going to be that much harder to get that under control and that much harder to keep that from completely directing your behaviors when it comes to trading. I've also been in this scenario where, you know, I've been up and now it's going back down. It's like, oh man, you know, like you were there. You were there already. You had 200x and now it's going down. It's like, oh man, like it was there already. It's going to get it back. Like it's that much more believable because it was already there. So you're going to hang on to that investment like with everything that you have, because not only is fear in play where you know you can't lose that, but now you're riding on hopium, and that's a whole other topic of conversation. You never want your trade to be driven by hopium. You want it to be composed and conducted with a logical, rational plan. So I hope that outlines kind of the spectrum when it comes to trading psychology. These are, the most important thing I would say for you to take away from this space is right here. The number one takeaway, and that's learn to be able to identify these emotions within yourself before getting into trading. Another really helpful way to do it is if you are going to get started, and here's my segue into having this conversation be from the perspective of somebody wanting to learn, wanting to get into the market, and wanting to kind of get their hands dirty and learn. And this is, in my opinion, one of the best ways. You can also paper trade, which I personally believe it's a bit of a contentious hot topic here, but I do believe there's a time and a place for paper trading. I love that your hand's up. I'm going to get to you in 2 seconds here, but just let me explain my rationale on ImmutableAlpha. I believe paper trading is very effective to become familiar with the mechanical aspects of trading, of getting to know your platform, of getting comfortable with placing your orders, with placing your stop losses, with adjusting your stop losses to take profits, with using all these different order types. I firmly believe that paper trading is almost crucial in that respect, especially if you're coming from a place where you're a complete beginner in regards to all of this. But if you really want to get the experience of trading and get the full value, I would start by actually using money so you can kind of get a feel of that emotional pull and drag in either direction. But just make sure you are using risk management to a place where you have very, very small positions, because as soon as those positions get too high, that's when the fear and the greed is going to really take control. And you're new, you're figuring all this out. Only risk exactly what you can afford to lose, and it's best when you're learning to have that be in the dollars or cents even. Immutable Alpha, I can't wait to hear your take. Let's hear you.
Hey again. I love that you brought up the paper trading. It's all about just having skin in the game. And I wish that I had known about paper trading when I was first starting to invest, because the reality is that if I had just counter traded myself for those first few years, I would have basically had a 100% win rate. But that's, realistically, that's how markets work, is that when you are just getting started, most likely you're getting in at the top. Most likely you're not going to have the risk management to know to, get into the right things. You're going to be betting on the speculative assets because you think that Bitcoin is already overpriced. And the speculative ones are the ones that go to zero. And but yeah, I wanted to talk about adding on that it's not, the whole thing is that to make it not about all or nothing. And this is where we get stuck, is like, should I sell or should I buy, or should I sell now or should I wait? But the whole point is, the best thing is to, and this is even the best investors, is to not be all or nothing. And the way to do this is a strategy called DCA, dollar cost averaging. And basically what it does is it just averages out and this works on your entry, your buying, as well as on your exiting, on your selling. Nobody has a crystal ball. Nobody knows when the top is going to be. No one knows when the bottom is going to be. What we can predict is that we're, in an area of value, which is like the bottom area, kind of where we are right now. We're at a lot more value now than we were a year ago, or when things are getting overheated. And so um, break it into parts. And this is even for trading, whether it's long-term investing or trading. You have your take profit. Let's say that you buy something at 1 and you want it to go to 2. Set your first take profit at 120. You can have the next one at 140, 160, 180. You could even have your last take profit as like a moon bag, the one that's got, a $5 target. But the whole idea is to remove that all or nothing mentality. And this is what I did when I was first really starting to accelerate my learning, is that it helped me to have the skin in the game that way, in the fact that by breaking up my selling and my buying into parts, I was able to actually see through actual action what was working. So if I bought at 5 different levels, I was able to actually look at how I felt, what my emotions were at each of those levels, how I dealt with them, and then how the results ended up for me. And the same thing on the way up. And the nice thing about that is that if something goes up, way up, and you've already sold a bit, you're never going to be upset about taking profit. And if something goes down and you've already gotten, 20, 50, 60% out, you have that much less exposure on the downside. So, and you actually see, you're able to learn from, okay, I should have sold more. And next time you sell a little bit more, and next time you sell even more. And then to the point where you learn to actually, use your respect your stop loss every single time, and that's when you become a professional.
Amazing, my man. Thank you so much. Really appreciate that you're here and you're able to offer your perspective. So happy that you brought up the dollar cost average component. I was hoping that had crossed my mind earlier in the space to talk about like partial profits and all of that, but it was completely gone. So I'm really, really happy that you brought that up, because that is another really, really important concept to take into consideration, and it is another way to really help mitigate fear and greed from taking over. But also, it allows you to, I love that, have that small percentage that's still there as a moon bag to, in case price does just skyrocket, you have that as an opportunity to continue to bank on that. And having that on the table is in previous times where I've used that strategy as well. Like, let's say I'll take off partial profit at 1.5x take another, or they can be 30% off at 20 or at 1.5x, take another 30% off 2.5x or 2x, take 15% off at 2.5x, and then I have that last, whatever, I know I butchered that math, but let's say 10-15% of my pot where I'm already overall in profit. I have, I'm not going to feel that FOMO of missing out on that massive run up if that does happen, and that FOMO is not going to influence me to rebuy in at the top and risk it turning around, because buying at the top is, I'm glad this came up here actually, is always very, very risky. You know what? I'm not going to go down that path because that's a whole other topic of conversation. But I almost fell down that rabbit hole. But you know what I'm talking about, Immutable Alpha. That's we're getting into different theories at this point here. But I really appreciate you bringing that up, and that's awesome. And I think that's an amazing place to start maybe wrapping up this conversation here. You inspired one other thought that I wanted to bring to the table here, my friend, and that's the idea of tracking your trades and how much value there could be in that as well. Strongly recommend you keep track of every single trade that you do, either in a ledger on a piece of paper. There's trading programs or out there services that you can actually input every single trade that you use. And this information is extremely valuable. You can take a lot of just such quality information from this to guide future trades. In particular, you can find out things such as what trading setups work for you, what time of day you trade best, what time of day you trade the worst, what effective risk management looks like for you, what ineffective risk management looks for you. Like, let's say you're noticing at the end of, let's say, a month of trading, that every time you go in 2.5 to 1 profit risk ratio, you always seem to lose. Yet every time you go in 2 to 1, your win rate, let's say, is like 60-70%. So now you have that data moving forward to, after evaluating your performance, you can then readjust your plan and maximize it in that way. So I'm glad that you went down that train of thought, Immutable Alpha, because that was another huge piece of advice that really helps bring my trading to the next level here. And then the last point that I wanted to quickly just touch on is how to get started in learning about TA. That's kind of the third pillar here, and I just wanted to kind of share some insight on that. That there is a tremendous amount of support out there. And we've touched on this idea before, but there is no excuse for ignorance this time and place. My recommendation to get started is to cast a wide net. There's so many different types of trading styles. There's so many different types of trading theories out there. Check out a whole bunch of them. And then once you do that, focus in on ones that really resonate with you. And once you do that, start practicing with them. And by using the strategy of tracking your trades, you can see which ones you're actually the best at. So don't rush into it. Take your time, learn. There's a lot of really amazing services out there. There's a lot of really amazing mentors out there. And there's a lot of just phenomenal resources when it comes to trading books, services, websites. And I'm happy to share with anyone afterwards. But yeah, definitely take your time, learn a bit about market, learn about how it moves, learn about different trading patterns or different trading theories, and take it from there. Immutable Alpha, Bruce, or Quantic even, do you guys have anything you'd like to add to that particular point about how to get started in learning TA? Any recommendations you guys have?
Go ahead, Quant. I'll let you get into this part. Go ahead.
Yeah, I'm not too much of an expert, but just to say, to complement this, with the fact that maybe one tends to think that, you are losing opportunities, okay? You're all the time you're seeing social media, like this person did this amount of money with this token and so on and so forth. But don't panic on that. there is a lot of opportunities there, and it will continue to happen. So just to reinforce what Travin is saying, that one of the most important things is to learn the fundamentals, and it's for free, and there's a ton of resources. I am not too much of an expert. I pretty much prefer to pass the ball here to Trav, which clearly has a lot more of experience. But I would just recommend to stick with the fundamentals at the beginning, and don't panic because you miss an opportunity. It will happen all the time, and there are plenty of opportunities, that's for sure.
Love that, my friend. Excellent points. That's a huge one I just want to shed some light on and focus on just for a second. And that is, especially being on CT, especially being on FinTwit, there's always an opportunity that's being highlighted, and there's just that hype is always there. So just try to be aware of that. Don't get pulled into it, because FOMO is very dangerous, and it's a way to lose a lot of your money. There are always opportunities that will present themselves. If you miss it on this one, that's okay. There will be another one. And I have been in the game long enough to know that and be able to say that with 100% certainty. That was a huge detriment to my trading for so long. And if only I knew that, I wouldn't have jumped blindly into AMC when I did and lost way too much money. Is there true, it sounds cliche, and I didn't believe it when I first heard it, to talk about your point, Bruce, where you need to really learn these things, and it's hard to really just hear it and absorb it and live it, is that I promise you, there will be another opportunity for awesome wins. So I think that's a great way to wrap it up. I want to just throw out there, if anyone else has any other questions, input, experiences they want to share, now's your time. Come on up. We'll get you up here in a heartbeat. Also, ImmutableAlpha, I see that you're back, and I'm happy that you are. I'm not sure if you're having technical difficulties, but the odd chance that you are, I just want to send you my huge appreciation for joining us today, my friend. Really, really, truly appreciate all of the information that you share with us. I would love to be able to keep in touch and learn from each other, and just, pick your brain a little bit more. Clearly, you've got a ton of experience, and you know what you're talking about here. So I just want to extend my gratitude for coming up here with us today, sharing your experience, sharing your knowledge. So much value, and I know everyone gained a ton from that. So thank you so much, my friend. Thank you so much. All right, yeah, Quantic, Bruce, any final words before we wrap it up here?
I guess guys, just when you're going into a trade, or you're opening an account, or you're about to make a wager, just first and foremost, do not bet outside of your bankroll. Don't go outside of your bankroll management. Just try to be as level-headed as possible. And then I could go on for 5 minutes about that and everything that is loosely associated with it, but I'll just leave it at that. Just try to be as level-headed as possible, and don't let your emotions, get the best of you when you're making actual and wagering real money on trades, bets, anything. Just, you got to keep a level head. It's so important. And literally, I've seen good traders and good sports bettors lose everything because they can't control their emotions. So that's number one right there. Just, if you can do that right there, you're way ahead of the game than almost 90% of the people that are in the field. So that's what I'll leave it at right there.
Amazing, Bruce. Thank you, my friend. Great. I love let's do that. Let's each lend our top one or two final thoughts when it comes to advice to move forward, just so that really sticks in the minds of everyone here today, including myself. I often still need to be reminded of these things. So my big one is not far off from yours, Bruce. It's that as soon as fear and greed start directing your trades, you are no longer trading, you are gambling. And that is destructive and not sustainable. So just be aware of your own mind and how it works. I can't help myself. One quick tangent. I would strongly recommend anyone to learn about trading. And here's why. This completely took me off guard. And there's a lot of parallels between this and my journey here in CT. And that's the amount of personal growth that I have undergone since learning about trading is absolutely wild. I now know myself so much more than I ever thought I would just by going through these experiences. The market doesn't take prisoners. It will humble you so fast if you are being overconfident, if you're being fearful. It will teach you these tremendous lessons about who you are as a person, and you are forced to confront these if you want to keep moving forward as a trader. So the amount of room in there to actually learn about yourself and grow personally and overcome these, if you give yourself a chance to actually confront the emotions that are popping up, the opportunity for growth is tremendous. So even if that's the case, just for that alone, even like putting aside the fact that you can make this into potentially either a really fun hobby moving forward, or as a way to make some extra income, or as a way to provide financial freedom, at the very least I recommend jumping into this game because of how well you will get to know yourself in the long run. And I think that's my biggest takeaway is I love trading. It's taught me a ton about myself, and just bringing it back a little bit more. I've been very public about, my mental health struggles and all of these things. Honestly, trading has exacerbated all of this. It's made it a hell of a lot harder in moments where I've let fear and greed take over. So that's important to bring up. But I have zero regrets because in the long run, I've now confronted those sides of me that I likely wouldn't have if it wasn't for trading pulling them out. So there's a safe way to do it. Be safe, know yourself, be open to the possibilities of learning. And it's a wild ride, and there's a lot of value that can be taken from it. So I'll leave it there. Quantic, I'm going to send the mic back to you, my friend.
Nothing. I mean, what can I say after that very inspiring speech? Just to thank everybody for joining as usual. We will be here next week, and I think that we will be talking about DeFi, which is another whole world on its own, right? So we are going to be learning a lot next week with people that really knows about this stuff. So if you guys want to talk about a different topic for the subsequent week, please reach out to us if you have any guests, or if you want to be featured as well. My DMs and the DMs of Trav and Bruce are always open. And let's go in peace. Let's have a nice day. Thank you very much.
Amazing, guys. Yeah, that's a wrap. Thank you guys as well so much for showing up. Always love these spaces. This one was a lot of me talking, but thank you for indulging me. I love talking about this stuff, so I appreciate you being here and listening to my speeches. Yeah, I look forward to connecting with you guys all and growing with you. Huge honor for me. So yeah, much love, everyone, and I appreciate you all.
Thank you. Bye-bye.
Have a great day, guys.